What's up, YouTube fam? Welcome back to the channel. In this episode, we're going to discuss the best strategy to make the most money selling options in 2025. So I want you to kind of ignore, these positions I'm in, because this is just, some baggage that I brought with me from 2024 into 2025. So it doesn't necessarily align with the strategy I'm going to teach in this video. But I want you guys to consider that this is also coming from a place of experience, right? Like sometimes the best teachers are people who, most of the time the best teachers are people who you want to be like, right? But sometimes you can get a good example from mistakes, right? And learn from other people's mistakes so you don't have to make them yourself. So with that being said, don't acknowledge these two positions, but let's just discuss the strategy that I would use to sell options. So we're going to do it from the reference of if I was at this sized account, right? Obviously, technically speaking, with these rolled positions, I should be at this, and hopefully, ultimately, by the time I do close these, we will see this account at 26.4. However, there has been moments, right, where I've started to realize just all the time spent in these positions could be spent in other positions. Like someone in the Discord today took a cash secured put on Palantir, and ultimately they were up like 40-50% within a couple hours. So if you're watching this video, shout out to, I believe his name is Baker Boy in our Discord. But the point is that, when you're losing money or you're in a position that's losing, it's more than just that, right? Because it's the gains that you could be making that you're missing out on because of the fact that your capital is tied into other positions. So with that being said, in terms of what I would do, right? So let's just talk from the reference of a $20,000, $25,000 account. The first thing I would do is I would be using 7,000, or at this point, right, 7,800 for TQQ, which is basically QQQ but 3x leverage. And the reason why is because in the end of the day, the QQQs, the NASDAQ, right, it doesn't really get much safer than this. So yes, there is a little bit of leverage, which, with leverage, you do have to be careful. And that's one mistake and one thing I've learned from being so deep into MSTX and CONL is that these leverage indexes, when it comes to the decay, they don't go up the same as the regular, assets. So what do I mean by that is when we look at Coinbase, and this is something I didn't really look far enough into when I took the position, so I will, admit my mistake in that regard. But look how Coinbase had this top in March, bottomed out, and then clearly surpassed it. And now, even if you bought the top, you'd basically be break even. When you look at CONL, right, you notice that the same top it had in March, then came back down and followed the same trajectory. The difference is it didn't clear the top, right? Notice how with Coinbase, it did clear the top. With CONL, it's not even close. So to me, that just shows the difference and the decay in real time. I started looking a lot deeper into these. And I know you're thinking, right, Jared, what the heck would you do putting 20,000, 25,000 into cash secured puts on these exchanges where you didn't even give yourself all of the info? Listen, guys, there's a lot of info to absorb when it comes to taking positions, when it comes to stocks. You can overthink yourself to death. You can think you know it all, and there could be insider selling. There's so much that you'll never know. So for all the people who might comment and say, this guy doesn't know what he's doing, this guy doesn't know what he's talking about, I want to believe, I want proof that every investment you've ever taken, you knew every little detail, every employee, everything the CEO is doing, right? There's so much about every company, every stock, that it's just impossible for the average person to know. That's why we're retail, right? That's why we're dumb money, as you can call it, because there's just always going to be so much that we don't know. And that's why for the average person, index funds is the safest bet. So with that being said, the first thing I'm doing with 25 grand, right, is I'm going to do a third at least into TQQQ. So, let's just say we're doing next week or 15 days out. Maybe we go for a 30 delta. And you can go a little higher because of the fact that it is the Qs, right? Now, there is still some leverage, so we don't want to be getting eaten up by the decay. But the difference with this one is this one has been around since 2010, right? February 9th, 2010. So 15 years almost, which makes it obviously a lot more trustworthy. Obviously, it's up tremendously as well over the last 5 years, up 258%. Now, if we look at the actual Qs themselves, what are they up over the last 5 years? 138. So this is actually performing how you want it to perform, which, as you notice, it's still not 300%. So it's one thing to consider with these leverages is as much as they're supposed to 2x or 3x the asset, it just doesn't always do that because of the rebalancing, because of the decay. I read all into it. I'm not going to explain it deeply, but if you want, I actually posted an article in the Discord today. So if you want to join our community, check it out. And then I had ChatGPT give examples. So I put that all in the Discord. So again, if you want to check it out, feel free. But with that being said, again, 7,700, and I'll just collect the 275. That's with a third of the money, right? We're not going to be greedy here. Now, with the other 2/3, and again, I'm not saying you have to do the indexes. I'm just saying that when it comes to everything that is known, when it comes to everything that it takes to pick individual stocks, right? There's so many stocks that you'll notice are just down tremendously that you think are good companies, right? Like we go to Wayfair and you look at the Wayfair long-term chart and you see that it looks like a rug pull. You go to Walgreens and it looks like a rug pull. And there's so many companies, right, that you would think are good companies that are just down so much, which is why for the average person, a TQQQ isn't a bad idea because it's leverage, but at least it's still the index. Now, if you want to be safer and you have 25K and you want to use the whole amount, and you go 1 week or 2 weeks out, listen, 546 for a week is still great money. 4 weeks, you're talking 2,400 a month. Like you're still talking close to 10% on the Qs per month, So in the end of the day, there's nothing wrong with if that was all you did. Now, if you don't want to do it, I definitely don't recommend doing this, right? You see how I did 4 contracts of Con L, that's 20,000, and then 5,500 into MSTX. So that's the whole account, right? 2,600. Now, we do have some buying power because of the dividend that MSTX paid out. But the point is, you don't want to go all in on one name or one industry. So if you're going to do some sort of crypto, my general advice would be break it up into thirds, fourths, even fifths. If I have 25,000, strive to get 5 different 5K positions. Now, with option selling, it is very tough because a lot of tickers are too expensive, right? So like TQQ, you need 7,800 to play, as opposed to the QQQs, you need 51,000. So it's not going to be so easy to just break it into 3s, 4s, 5s, a fifth of the account, but strive to, right? So, one other thing with, me being fully into this position, right? There was a play I wanted to get involved. It was RGTI, right? When we look at RGTI, I believe the position I was going to take was like last week and the strike was going to be $10. So obviously when you look at it, it's ran 100% since. I'm not saying I would have caught 100%. The point is I could have had my money in a play like this where I could have collected the full premium instead of being in MSTX or Con L. Now, with that being said, I'm not saying that the MXTX and Con L, like they're the wrong place. It's more of just if I would have diversified, right? Like for instance, this pays really well. As you see, 6,500 would have paid 640. That's good money, great money, and that's that's current, right? That's where with where the price is at the moment. So again, I'm not saying it should have been RGTI or Con L or RGTI or MSTX. It's more about just not full porting into one industry, one sector. Maybe you have a little bit of crypto, maybe you have a little bit of tech stocks, right? Maybe you have a little bit of Con L or Coinbase, a little bit of Tesla, a little bit of Baba, diversification, right? And I know this sounds simple, but the reason why it's not is because over diversification isn't good either. If you're involved in so many things where every time one goes up, the other goes down, your portfolio is not going to grow. And I've had that issue in the past with my own investing where I was in 30 different things and you don't really see your portfolio grow. That's why I think keeping your account within 3 to 5 names that you're selling puts on. So this way, maybe you get a sign, maybe you have to roll. But if your whole position is in, then and you're dealing with what I dealt with, which I made truthfully a real rookie mistake, which was not just putting it all in, but then not even acknowledging that it doesn't have weekly options. So the rolling, or even if I wanted to do covered calls, it's just not going to be nearly as efficient or effective. So believe me, there's a side of me that's like, what, maybe I do just take my losses. Obviously, the account's not where it wants to be, but we're still up, and I still have learned so much, and I have the ability to, now grow it with new information. While obviously the other side of me is like, Jared, now is not the time to panic sell. Hold on to the Con L, hold on to the MSTX. Bitcoin does look very bullish at the moment. So, listen, I'm weighing my options. You guys feel free to tell me what you think I should do in the comments. But ultimately, I think that is the strategy. Now, the other thing I want to acknowledge with the strategy is when you're picking stocks, I think it's very important to acknowledge the earnings reports. Now, I don't think necessarily if it beats earnings should matter because the reality is beating earnings is just beating analysts who don't really know what they're talking about. So this is what I think ultimately it should look like, right? You need to focus on names that have growth, right? Like obviously when I pulled up Walgreens or Wayfair, these are names that you would not expect to be down so much, right? Like when you hear of Wayfair, would you really expect the stock chart to just be completely down? So when we go and we look at their financials, you notice how the last 4 years it hasn't been going up. It's almost like the market doesn't care that you're a billion-dollar company. The market cares about what the future is going to be. The market wants to see innovation. It wants to see revenue growth. So I think when it comes to what you should look for, I don't think you need to necessarily do so much research where your eyes can't even look at the screen anymore. But I think you need to have a little bit of knowledge. I actually happen to really like this indicator that, again, someone in my community brought to my attention. So that's the thing. I want to shout out everyone who's watching these videos because I genuinely have learned so much from the comments section, from the people in the Discord, just things that I never would have learned on my own. So for people who ask, why would you put yourself out there? Why would you make content? I mean, that alone, it's like the amount of things. I will say I didn't even know about these leveraged, I didn't even know about these until people in the comments brought them up to me. So maybe that would have been better, right? If I never heard about any of this stuff. But ultimately, I've learned so much from just communicating and connecting with you guys. So huge shout out to everyone. But, again, when you look at these financials, we were seeing growth. And now you see how it's just been declining. And that's just what the market cares about. The market just doesn't care that you're doing billions of dollars. They only care about seeing growth. And it's like when you look at the financials, you notice how the last couple of years, it hasn't been going up. And all of a sudden, it's just started dumping. Now, this does look like a good buy, I will say. I don't think Wayfair is going bankrupt. I think this is a good place to buy. But at the same time, look at what it's done, right? Like, it just goes to show that the average person shouldn't be touching individual names because there's just so much uncertainty. There's so many companies out there that we think are doing well. And then you look at their stock and it's just completely dumping. So, again, with that being said, how do you protect yourself? Just to keep it short and sweet, I think you put a little bit of your portfolio into something like TQQQ, sell cash secured puts, and then you do maybe some risky stocks like crypto. Again, let's just say you have 25K. I personally would try to go 5K each. If that's not possible, right, then don't be afraid to go, in this case, 7,800 on TQQ, maybe 3 or 4K on ConL, maybe a couple K on IonQ, like trying to keep it into just different sectors. And that way, you can chase volatility without getting wrecked because, again, in the case I'm in, okay, yes, I was able to grow very fast to 25.2, but, in 50, 60 days, right, from November 7th to December 16th, so less, right, 35 days, I was able to do that. But now the position I'm in, it just wasn't worth it, right, because I could have grown at basically the same speed, maybe a little slower, with so much less a risk, right? I could have had, the reason why I was doing it the way I was doing it is because I was chasing the highest premiums and just taking plays that I felt like made the most sense. Under the pretense that, again, I don't want to diversify because over-diversification is no good. But no diversification is also not good, right? So it's all about finding that balance. A big part of the strategy, if you've been following this channel from the beginning, was taking earnings plays. And that's why reading the financials, again, just from a surface level, right, just making sure it's growing year after year, in my opinion, is going to be crucial because, you can argue that I definitely got lucky for the first month of this challenge and channel because I was taking earnings plays and it was able to grow. Now, listen, part of it wasn't luck. Part of it was understanding where to put my strikes and ultimately just understanding that earnings tends to kill premium. So it's usually a good call to sell options for earnings. But the side that was luck was like I didn't necessarily acknowledge if the company as I was selling earnings on actually had revenue growth. Like obviously I was doing mostly blue chip stocks. And if you want to see it, just watch the entire channel from start to finish. You'll see everything I've done. Every single trade has been documented up until this point. But now I just have a lot more information in my arsenal, a lot more data. And I think just taking what I've learned over the last 60, 70 days and using that experience is just going to help this account grow tenfold. So that's the strategy. That is what I think 2025 is made of. I think that's what's going to do the best for anyone who's trying to manage their portfolio and sell cash secured puts. Let me know what you guys think in the comments. Make sure to subscribe to the channel if you want, just to be updated to see where I take this account, what I end up doing with these positions. Make sure to like the video, help the algorithm, help me out. And if you want more, if you want to be able to communicate with me and hundreds of other people that are doing this, make sure to join the free Discord. There's a link in the bio, and I'll see you guys in the next video.